Welcome everybody. The day is almost upon us. Our official open date for the Spartan Storage Funds of 2023 is going to be next week on March 15th. And tonight we're going to walk through just a brief overview of each fund, kind of go into a little bit more specifics on each fund, but we're going to go through the growth, debt, and income fund tonight. We're also going to go to how to sign up and sort of the process of doing that. So without further ado, we're going to go ahead and just jump right into it. Get into our disclaimers, which we're not offering any legal, tax, or investment advice. Please do your own due diligence on the offering. Our deal rooms are opening up now, so you can go in and you can look at all the documents surrounding the investment, the offering memorandum, the subscription agreement, etc. Also, this is just a general overview, so we're not going to go into deep financials or anything like that. Please visit the dashboard for that information. And as always, we're not giving any legal, tax, or investment advice, so please seek your outside counsel. And these are just projections that are going to be covered in the webinar tonight. So if you go to our website, Spartan-investors.com, this is where you can find our login page to where you can go in and register for the investment. And you can see up here, we have an investor portal. This is where we're going to house all the financial information, monthly updates. This is where you can log in and subscribe and fill out the subscription agreement, which is the document you have to fill out to invest in the fund. Once you sign the subscription agreement, it'll send you wiring instructions, and then you send the funds via check in the mail to our corporate office in Denver, Colorado, the Colfax address, or you can send a wire to our JP Morgan account online. So you can verify wiring instructions if you'd like by calling our 1-800 number, and there's a pre-recording of the JP Morgan wiring instructions on that. So, but once you log in to our website, Spartan-investors.com, you can click on the portal there. That'll bring you to a welcome screen, and if you've already invested and you've logged in before, simply just enter your credentials. If you haven't invested, you can either email us at investors@Spartan-investors.com to create your account or get in touch with one of us, or there's a create account feature here where you can create a username and password and log into the account. Once you're in, you'll see an open offerings tab. You actually have to click the open offerings tab to get into what's open, what you haven't invested in. Now, as the year progresses, if you make investments in the fund, your fund that you invested in, if you want to add additional subscriptions to it, it's going to move over to My Investments. So you'll actually have to go to My Investments, which is the tab just to the left here, to log in and actually place additional subscriptions into the fund. And so that's where you can log in. You can click on each individual fund. That's how you subscribe. And as a note, when you're logging in, if you're logging in and investing as a Class B share or Class A share or Class C share, you can actually deselect the box for Class A share and select the correct class share. So when you're logging in, if you're coming in as a B share, and it'll always default to A, so just make sure you deselect Class A in the box and then select the appropriate investor class that you're going into. Once you sign the documents, that'll workflow to myself, and I'll countersign the subscription agreement, and again, wiring instructions are sent. At that time, we accept funds on a first-come, first-served basis, so please do get your funds in. We have over 500 people or so on the wait list, so we're really excited about the interest that we've had in the funds so far. So that's how you sign up on our investor dashboard. The only thing I'll add to that is if you have a verification letter from another investment, a accredited investor letter, you actually need to have that because all these investments are made under 506B. That means that we generally solicit. That means that the SEC requires us to go out and make sure that you're an accredited investor and you meet the definition of accredited investor. We do that through a third-party verification service. If you have a letter already, you could get one from your tax, CPA, financial advisor, attorney. They can send that to us, and all it needs to say is that you meet the definition of an accredited investor, and that's signed by a licensed professional. So if you can send that over to us at Spartan-investors.com, or we offer a free service. So once you get to the end of the investment process, you'll see a link. You can click on that, and it'll say, click here to start my verification process, and we get you a free letter on verifyinvestor.com just for being a Spartan investor. You save that 60 or 70 bucks, whatever they cost these days, and then that letter will come to us once you get approved. So that helps you kind of keep moving through the process and sending in funds. So we're going to jump in, but if you have any other questions about the sign-up process, just get in touch with one of our team members, and we'll be happy to help. So this year we're offering 3 funds, the Debt, Income, and Growth Fund, and that allows our investors access to self-storage in the way that they prefer. If you prefer to have the most upside potential, that's the growth fund. if you prefer to have cash flow, depreciation, and a little bit of upside at the end, that's the income fund. If you just want to clip a coupon every month and know that you've got money coming in, that's the debt fund. So really great options, all backed by self-storage. And so we're excited that this year we're able to actually take whatever we find in our deal flow with our acquisitions team and kind of categorize the right investment into the right fund. This helps us better get better predictable returns for the profile of investor that's coming in, versus trying to do everything deal by deal where we have to kind of perfectly line up the equity and the debt and match everything perfectly, or whatever it might be. Like we bought portfolios in the past this way, or we bought single assets. What's great about these funds is you can say, hey, this one's got the most upside potential but no cash flow, perfect spot for the growth fund. Or this facility produces cash flow day one, perfect spot for the income fund. So it's just a really great opportunity to get everybody in the right destination for their investment. So I'm going to dive into the growth fund today. I know that we've all, and the income and the debt fund, but I'm going to first start with the growth fund. And this really is just the way that we can produce the most value. This year it's going to be admittedly a little bit difficult to find existing facilities that work. And the Spartan Storage Fund really allows us to build the most value in a facility by offering ground-up self-storage developments in really favorable markets in the United States. We have high criteria for pricing and demand and all that, and that's going to produce some really good results. Our experience building these is second to none. We've built some of the most challenging markets: wetland mitigation, rezoning, entitlement, whatever it might be. And you can see here, these are just a handful of construction projects that we've done in the past, such as building a 217 home community to building a self-storage that required us to blow up some dynamite to actually get the foundations right. But we take our investments from trees to keys in the development fund, which is why there's no cash flow, because it takes a little while to get things moving. The growth fund, though, is the most accretive and creative opportunities, meaning that we'll buy land and we'll start entitling and permitting and reposition that property with our consultants. And then we get some built-in equity pretty much right away, which is really great for the growth fund. So we're focused on ground-up development, most potential for upside, and really creative opportunities. So the growth fund is going to target a higher multiple, about 2 to 2.3x over a 5-year hold. And this is going to roll up to about a 19 to 20% annualized return. 3 investor share classes, just like the other income fund, A, B, and C. Just like the income fund, it's going to have $50K to $1 million minimum investment, and then $1 million to $3 million and $3 million or greater. And what's great is that if you invest in the first 45 days, this is going to open on March 15th, and this 45-day window is going to close on May 1st. And so there's a lot of interest in coming in sooner, so we're actually thinking about even cutting it off and limiting the amount of dollars that we raise under this 45-day window. So we're going to see how it goes, and we're going to cut it off as needed. But the first 45 days, make your investment, and you actually get moved up a full share class. So meaning that if you were a B investor investing $1 million, you'd get the benefit of a C investor. If you were an A investor investing $50K the first 45 days, you get the benefit of a B investor. All in all, if you invested in the B share and got a C share, that's a 15% increase in what an A share would get. So it's a substantial increase in investment projected returns. So the growth fund, I've kind of simplified this a little bit. How do we make money in the growth fund? How do we provide optionality to our investors, and how do we really get creative? Well, I love ground-up development because it gives you really 3 options to exit. You can just buy land, you can move the paper, you can get the permits and entitle it, and you can flip the land. We've done something similar to that in the past, where you can permit the property and it becomes valuable, and then you might have an offer from another investor who wants to take that land and build the self-storage on it or build something else on it. So if we were to do that, that takes you between 1 and 2 years to acquire the land and entitle it. And if you were a Class C investor, you would get about a 39% return in 1 to 2 years if we were to do that on a property, on our projected returns. Option 2 is you could actually just build the property, get it to its certificate of occupancy, kind of be like a merchant builder, and feed the REITs. Give that facility to a REIT that's going to buy that property and take it through its lease up. And if we were to do that, that's about a 100% project level return. And for a Class C investor, you're looking at about a 79% return. in years 2 to 3. That usually, by the time you buy, entitle, and build, it takes about a year to build a facility, maybe takes about a year to entitle it. So between year 2 and 3, we're looking at certificate of occupancy. The next option we have on the table is we could actually take the property through its full lease up, meaning that we could put our Free Up Storage brand on it, we could put a store manager in place, start the promotions, and really get it stabilized. That would produce 165% return, or about 134% return annually, or I'm sorry, total return to our investors over between years 3 and 5. Some facilities lease up faster than others, some take a little bit less time to entitle, etc. So we're targeting between years 3 and 5. And this is what our facilities look like when we actually put value add in place. So this is our self-storage offices. We put beautiful brand standards on them. And what's great about the growth fund is you can build exactly what you want. When you build from the ground up, you can build exactly how you want the project to look. You don't have to kind of retrofit based on what the last owner had. So we really like that. Aaron Saunders, he's our president of Spartan Construction Management. We're fully integrated here, we're vertically integrated at Spartan. So we're doing all the construction, we're doing all the property management, we're doing all the acquisition, we're doing all the capital raising, etc. And Aaron leads a team with over 100 years of experience building self-storages all over the country, which is incredible. And Aaron hails from a background in building industrial projects for Casey Industrial in a former life. So he's got a great team that he's really built out, and it's all under the Spartan umbrella, which is incredible. So switching gears to the income fund. This is the next fund that we offer. And as the good old saying goes, there's three things that there's three reasons why we all invest in real estate: cash flow, upside, depreciation. And the income fund kind of checks all of those boxes. And what's great is that it also rolls up to decent returns, 5-year projected hold time, but a little less multiple than the growth fund, 1.7 to 2.0, which is about 14 to 20% annualized returns. So the thing that's great about the income fund is we put everything through a cost segregation study, and we apply bonus depreciation that gives about 30% depreciation to our investors. But let's talk about the fun stuff, cash flow. So we're targeting about 4 to 8% per annum cash flow, and that's projected to begin 90 days after your funds go active. And distributions are sent out on the 1st of every month. So in years 1 through 5, these are kind of projections, and we have this in the offering memorandum. 4 to 5, 4 to 6, 6 to 8, etc. You can see that on the screen. We're increasing our cash flow as we deploy our value add strategy at the property. So we might buy a property. It might take us a couple of months to get the property fixed up, to get tenant insurance in place, to get our ECRIs up, our existing customer rent increases in place, and get our marketing strategy going. And then once that starts happening, these facilities start to cash flow. Likewise, we might buy properties throughout the year. So it might take us 12 to 18 months to onboard the right portfolio of properties. So we're projecting 4 to 5% right out of the gates, and then it increases every year thereafter. So if you put in $100,000, the example is that you'd get $4,000 to $5,000 per year in cash flow, 4 to 6, 6 to 8, 7 to 8, etc. And so that you would be targeting about $28,000 to $35,000 in cash flow over a 5-year hold, or about $333 to $666 per month. Similar situation with the income fund, where we have 3 investor share classes, all the same investment minimums, and all receiving the benefit of investing early in the fund, so first 45 days. So funds open on March 15th. You have until about May 1st to take advantage of that. And you can see that it gets you a better preferred return. So instead of getting a 7, you get an 8 for B and C shares. Then after that, we split the return 70-30 until either a 14, 15, or 16% hurdle. And then after that, there's a split, and depending on your share class, you're going to get a better split for the fund. So what does that really mean? It means if you're an investor in Class A and you put in $100,000, that would mean you'd get about a 92% return over a 5-year hold. But if you're a Class B investor, you're looking at a little bit of better return, 97%, 97.5% over a 5-year hold. And if you're a Class C investor, you're getting the best return at about $201,000 per 100K invested. So getting about a 9% benefit over a Class A, or about a 3.5% benefit over a Class B. So really favorable. But again, that's if you invest in the first 45 days, that's going to bump you up that full share class, and you can benefit from higher returns. All right, so depreciation in the income fund, again, 30% loss in the income fund, or about $30,000 if you invested $100. And so if you had, in this example, if you had cash flow of $32,000 over 5 years, you might wonder, well, how much taxes would I have to pay on that? And the answer is you'd have a blocker for a little while because you get that $30,000 depreciation in the first year, and that's going to actually shield all of your cash flow from years 1, 2, 3, and for years 4, and then some of year 5. So it's a really nice benefit to have that depreciation. You get that on your K1, and we get your K1s out in the March timeframe of next year. The value add strategy that we deploy in the income fund is we buy these mom and pops. My favorite picture is the one with the big tree. That's a facility we bought with a tree actually growing out of the property. We do things like paint drive aisles, asphalt cameras, security, lighting, fencing, things like that. We like to find the rough and tough properties, the ones that don't have signs or working websites, or they don't offer online sales or 24-hour bookings. And we put our free up storage national brand standards in place. So we might take a property that has really poor visibility from the main road because they have bad signage or just bad curb appeal, and just really professionalize the brand standards there. And these are just some of our properties from around the country that give you a really nice sense of how our facilities look from the main road after we've deployed our value add strategy. So you can see from Sandy to Pea Ridge, Arkansas, we like to get that name out there by the road so people can really book, because that's what really drives customers to the facilities. The other thing that we do is when we go into these properties, some of the offices are just garbage. They have cats everywhere and just managers running amok and cluttering the desktop and things like that. So we get in there, gut the offices, and really just make a nice retail feel as part of our value add strategy in taking over some of these facilities. So you can see here, these are some of the pictures of our offices once we're done sort of deploying that strategy. And then lastly, I'll talk about just the way we add value is we do better fencing, better lighting, better security gates. We put revenue management in place so that your gate code won't work if you haven't paid after a couple of days. So we do things that make it secure for the customer and also convenient for the customer to book with us. And that's really, really key. And we do that through the things that you see here, 24-hour bookings, automation, staff training, etc. And we do that under our free up storage national brand, which has now a new president who's going to take over our control of asset and property management, which is great because he comes from REIT experience. So Matthias just joined us, and we're really excited about that. And we're really excited about where the direction that free up is headed as a national brand. So lastly, we're going to just quickly go through the debt fund. The debt fund is simple. It's investing in notes. It's investing in private debt. It's something that you get a promissory note for, and you get monthly cash flow. And it's backed by our self-storage facilities. And the exemption requires us to collateralize these properties. So 55% of all of the money that goes into the debt fund has to be backed or collateralized by an actual asset. So we plan on putting promissory notes or collateralizing the facilities in the debt fund. And so that's what you get. You get monthly payments, and then it's all backed by self-storage and cash flow. So the returns, 8% for a Class A note investor, and that gives you a 90-day redemption period option, meaning that you'd have to lock your money up in the debt fund for 90 days minimally before you can call your cash back. And there's a ton of stipulations to the redemption period, so please reference the PPM for all of those stipulations. And do your own due diligence on that. But we do offer redemption option, which provides a little bit of liquidity for our investors. But the debt fund really, as you can see, is kind of the lowest risk investment that you can make out of these couple of funds. The second option is Class B note investor, who gets a 9% per annum return, and that requires you to lock the money up for 2 years. Both of these investments, Class A, Class B, are on a 5-year note. So if you said, hey, I think I want the 90-day redemption, but I'm not sure, so I'm just going to go with the Class A. And then you just say, just leave it in there forever. You can go all 5 years, and at the end of 5 years, the note expires, and you either have to get on a new note or new investment, or we send your money back. So basically, and the same thing for 9. If you lock it, say, hey, I'm pretty good with the 2-year commitment. You can put the 9% in, and again, after 2 years, then you have a 90-day redemption option after the 2 years has passed, and then it goes to a 5-year note. So you can call it after that, but that's just what it does. And then at the end of the 5 years, we're going to call you and say, hey, where do you want us to send the money? So that's kind of how that works. And the benefits of private lending are really good. You don't have any UBTI, you don't have any UDFI issues, shorter timeline for repayment, and you're getting that predictable cash flow every single month. So it's a really great way to kind of get started in this private placement or alternative investment world. So again, the two different notes of investors, you got an A and a B, and this is just an example if you were to invest the minimum of $50,000 for either A or B, how much you would get per month. So if you invested in the A share at $50,000, you get $333 a month. The B share would get $375. What do we use the private debt for? To fix up our properties. It's a pretty tumultuous time for debt investing, for acquiring loans from banks. So it gives us an advantage to really get moving on some of these initial improvements, start fixing up properties, or purchase properties. So it's a really nice hedge for us. And we have a really strong track record in private debt. We've had over 7 full cycle loans where we brought in private debt, we paid them off with either bank financing or otherwise, and we've had over $40 million in performing notes, $30 million fully repaid, and I believe we have about $10 million or greater in the portfolio right now of private debt. That's all paid on time and does really well. We haven't defaulted on any of our private notes to date, so it's really great. About the borrowers, so myself, Scott, and Ben, I'll talk about the leadership team here in a little bit, but just a little bit about us. But where we invest for both the growth and the income and the debt fund are places like this, places where we have great locations. So drive-by traffic visibility from the main road is good, below market rents, and around where our other properties are. So we can get economies of scale that produce lower payroll costs or more efficient marketing, and that increases overall investor returns. And you can see the red dots here are just a handful of places that we invest, and we like to kind of co-locate properties for efficiency. Some of the demographics that we focus on, and we do a demographic study for every single facility that we purchase, and we start populating those in the investor dashboard that I talked about earlier. But we look for all these things like strong job growth, rent growth, income growth, etc. And our exit strategy can really be summed up in one word: optionality. We want to be able to have options. And as the 40th largest owner of storage, Spartan Investment Group is well positioned with its portfolio to sell to other operators at a premium price. Most recently, we've had a couple of properties go full cycle in recent time at a very low cap rate. So we're really excited about that. But this is kind of our exit strategy. We kind of view ourselves as this medium-sized fish. We go aggregate portfolios of self-storage, and then we trim off kind of what we don't want, what doesn't make sense for us, or what return a really nice profit to our investors to some of the larger self-storage operators. And there is a lot of money in the space right now. You can do some research on this. Prime Group just started one of the largest self-storage funds ever assembled. Public Storage is on a buying spree trying to do a takeover of Life Storage. There's so much money in the space, and it's really positioning us well to exit these properties at a great price. Similarly, a lot of 1031 exchange money out there that's trying to find a home in self-storage facilities, and a lot of mom and pops that are trying to get into this space. One of the facilities we're selling right now is actually a local mom and pop owner in a market where he owns a couple other properties, saw our property go up for sale, and is willing to pay a premium to get that asset in that market because it doesn't really come up to sell very often. So really great opportunity to sell to the big boys, recapitalize, or even sell to the mom and pops. So what you can expect from a communication standpoint, we send our communications on a monthly basis, trailing 12 financials, a little summary of what's going on at the property, and then we do a picture page if we have construction projects or activities for the last month, and then we send out all of our K1s in the March timeframe. Who we are as a leadership team, the 3 leaders of the company, Scott Lewis, myself, and Ben Lapidus, and we are the chief officers of Spartan, partners and founders, co-founders of Spartan Investment Group. And then we also have Aaron, Chad, Whitney, and Matthias on our executive leadership team, and they oversee the people, the construction, free up storage, and finance. So really proud of our leadership team, and you can read more about them on our website or in the PPM. And like I said earlier, we are fully integrated. So we're doing everything in the investment, from construction to property management, syndicating the funds, and even finding the debt. We have a capital markets team that goes out and calls all the lenders and gets the right lender for the properties. So a little bit about our team. We have over 110 employees, over 30,000 units, and we've been recognized by Inc. magazine and the Vet 100 for the last 3 years in a row. So this is a little bit about our funds. You can use the QR code. If you aren't already on our wait list, you can join our wait list that way. And if you have any questions whatsoever about the funds, you can email us at investors@spartan-investors.com, and you can inquire on our website or call one of our team members. But if you want to just learn more about the funds or stay on the wait list, you can keep that QR code handy. And next week, next Wednesday, we're going to open the floodgates and we're going to allow investors to start funding and subscribing. In the meanwhile, you can log into our dashboard, you can start getting your paperwork completed and kind of get that process started. But we look forward to having you join us in 2023, and thanks for watching.